Okay, Josh, we should actually be live. I'm just waiting for everything just to make sure that it's dialed in. But firstly, by way of introduction, before we get into this, perhaps you want to give our audience and everyone that'll be sort of slowly starting to tune in on this as they're probably disconnecting from the Daniel Andrews Media Conference in just a moment to tune into this. Tell us a little bit about yourself, what you do and your business itself, Josh.
So I've been a mortgage broker now for 10 years actually, which means I'm getting a little bit older. 10 years of talking finance has been quite fun and interesting. So my team itself, so we work under the brand Mortgage Advice Bureau, which is a UK-based firm. There's 1,600 advisors over there, and we're part of a new business that's starting here in Melbourne. So I've got a team of 5 people that work inside my business who are all lending specialists. I'm the head broker, but we have an amazing support team around us. So obviously come across thousands and thousands of scenarios in the last 10 years. Quite ironically, we still find new scenarios every day. So that's a bit of our background.
And I'm sure no more so than in the midst of a pandemic, finding those new scenarios to be navigating through on a daily basis, Josh.
Yeah, look, and that's what we're here to talk about a little bit today. Obviously, as mortgage brokers, we've been through the Royal Commission a couple of years ago and APRA coming out with interest-only changes a year or so ago, and now we're in a pandemic. So I think we just keep rolling with the punches and figuring out how to help our customers more with each scenario that kind of comes across our desk.
Yep. And perhaps just going back a step as well, I've been fortunate enough to work with yourself, Josh, on a couple of occasions. Personally, you've managed to help me buy some real estate in the past, specifically the home that I'm sitting in right now. And I should say that was, you've got a great team behind you, and that's why I was really encouraged and looking forward to having this meeting with you today, so that some of our audience can enjoy the relationship that we've got. And now Josh is working even more closely with our entire group. So and you understand the apartment market, you understand the city market, and the challenges that often we face. And that's a big part of it. So Josh, let's drive straight in. And just in a broad sense, what have been the key things, the 1, 2, or 3 things that have really changed as we've gone into COVID from a mortgage and lending perspective? Yeah,
so I mean, obviously, as brokers or bankers or anyone at the bank, we need to make sure that the customer's in a very strong position and comfortable. I find myself asking that question: how are you? Are you safe in your job? Likelihood, etc. Banks were looking, when everything first happened in, say, February, March, there was the banks kind of went into a bit of stress mode of how are we going to look at people's income? What do we look, and when someone has bonuses or commissions, how is that looked at? Just in recent months, obviously, with being able to pull your superannuation out, things are changing as well. So we've come across, to be honest, hundreds of clients over the last month or so who have been pulling money out of super so that they can boost their home savings and have deposits on savings. But the challenge we're coming across there is when a client pulls money out of super, they're effectively saying that they're in trouble and they need that money to get themselves through a situation. So the banks are not looking favourably at people pulling super out. We have actually come across a couple of banks in the last few days that are seeing it a little bit different. So there are banks out there that will do it. There are a lot of banks that aren't doing it.
And that's, I think that's really critical to think of, isn't it? The Australian dream of trying to save up a deposit, being able to access a chunk of money all of a sudden seems like a really attractive thing for a lot of people to consider doing. And what you're saying, and I was surprised, but it makes a lot of sense when you said this, is that if people are accessing their super pre-June 30 and now post July 1, that's having an impact. So just double click on that. So they've got to tick a box and say we're in trouble, and banks read into that.
Correct. So the banks do realise, and we've got to understand that the banks need to stick to responsible lending. Now, when someone is ticking a box saying that I am in hardship and my income has dropped as a result of COVID-19, I want to now access that $20,000 or $10,000. So some couples have accessed 40,000 over a couple of weeks span, 20,000 each. So if the bank is approving a loan, they're approving it based on the fact that someone has ticked that they're in hardship, which totally makes sense as far as the banks are concerned. And so there are one or two banks that are saying, as long as we're not using that money for the funds to purchase, then we may consider it.
Yeah, right. So that's definitely something that's going to be interesting to navigate, because ticking that box is probably going to have an impact on people over the next 3, 6, 12 months as they start to wanting to enter the market maybe for the first time. Just maybe touch on briefly how income is being assessed, because that's critical in lending. So just broadly, and then of course from a COVID perspective, what's happened there, Josh?
Well, so there is probably what happened in March, and then there's what's happening now, and the policies are literally changing every week. So banks will see what's happening in the industry and see what's happening with COVID-19, and then make decisions on policy based on that. So obviously with all essential services, the banks are still quite comfortable, because if it's an essential service and you're earning a lot of overtime, they're still quite comfortable. If you're a commission-based person, some banks are now shading that commission by 40%, whereas previously it was 20%. If your income is based on bonuses, again, they're being shaded by 40%, whereas previously it was just 20%. So different banks are doing different things. I think probably the biggest change just over the last 2 or 3 weeks, especially with the looming stage 4 lockdown, is how they're looking at self-employed people. So self-employed people was typically just the last 2 tax returns or the last tax return. Now they're looking at trading statements and BAS statements to ensure that that is still tracking the way it was.
Yeah, it's becoming really, really going to another level of detail, isn't it, Josh? And I think that's important to acknowledge as well, that if and certainly if our team, for example, our sales team were to buy a property and their income, it's say $100,000, a bank is only going to assess their affordability on, you're saying it's $60,000.
$60,000, correct.
I mean, that has a massive impact on what they can afford to buy.
What the banks always had cut and dry policies of, this is the person's base income, this is the bonus, and then that's it, let's go, as long as it ticks that policy. Now it's all industry based. They'll say, well, based on that industry, how safe is it? And assessors each day are saying, well, I don't think that job would be quite safe right now. So, and as a broker, your job is to ensure that someone is safe, not just get them a loan. We've got to make sure that they're safe, it's affordable, they're structured correctly. So there's a lot more that goes into just saying, hey, I know I can get that loan approved for you. It's all about looking after the client.
Yep. Interesting yesterday hearing both Josh Frydenberg and Daniel Andrews, applauding the banks and how they've really, really helped, the consumer over the last sort of 4 or 5 months. Have you seen that the same, and what changes, and have you seen that's always the case, or it's sometimes the case, or it depends?
Well, Royal Commission times changed a lot of things. So things became a lot harder. And over this, I've been very, very impressed with how the banks have actually reacted. They're trying to be extremely flexible with the mortgages that they're putting on hold, and also extending that too. So, there was that first initial stage of 6 months and allowing people to go on a pause. There was a lot of changes around clients doing interest only a year or 2 ago, and it was becoming a lot harder, and the banks have come out they're more flexible right now. So they're saying, hey, how do we help these clients get in a position to get through this? The flexibility of the banks has been quite amazing. So I think we should be all quite happy that they're quite strong and they do have a profit. They've got a good balance sheet there that's allowing a lot of clients to get through this stage.
Yep. So Josh, on that, I'm sort of seeing we've maybe got a little bit of a delay on one of our sides, but that's fine. We can work through this. We look after a lot of investors, Josh, that have got landlords that own real estate. Maybe some of those people that are self-employed or doing a little bit tougher at the moment. What advice would you have for people that are struggling with their mortgage repayments? What should they be considering doing? What impact will those decisions have?
Look, and you and I have talked about this all the time, and every single month the banks have different rates and different structures. I think what we need to do over the next 4, 5, 6 weeks, and we should always do it anyway, is just communicate with the right people. You know, where I've spoken to you about this before, about with landlords, I'm happy just to have a conversation, and we all have to be in this together, and we all need to make sure that we open up the conversation, because people are going to have a bit more time on their hands, I think, in the next 4 to 6 weeks. So if you can pick up the phone and just chat to the right people, and let's see if we can save some people some money, and we don't even have to refinance you. If we can keep you at the same bank and just let you know the rates that some of the banks are doing, and see if we can save some money while they are in lockdown. So keep communicating.
Yeah, I think that's critical, isn't it? You know, I'm going through this myself in refinancing, and I'm seeing that, you know, I've probably got a little bit more leverage than I thought I had, which is enabling me to, you know, to access a rate far better than what I'm on at the moment. We're all hearing about rates in the, you know, the mid 2s and the high 2s, and accessing that, but it's also got to be the right product as well. So Josh, if people are doing things like, if they are calling their banks and they're putting their repayments on hold, for example, what impact does that have?
There is a big impact there. So some people say, hey, I've put my home on a pause for the last 6 months, but can I please look at my rates and see what I can do? Can I refinance? Now, when you put your loan on hold, you're technically going into hardship, or you're claiming hardship, which is why it's on pause. Now, you can't then go and negotiate with another bank and refinance and go somewhere else if your loan is on pause. And the banks will say, okay, once that comes off the pause, we want to see 3 months of maintained repayments to show that you're not in hardship. Now, the banks understand that you did it because of COVID, but you can't just go and refinance a mortgage that's on hold. So again, every person's in a different situation, Baden, and I think we've talked about it before. You know, you can meet 10 different people with 10 different incomes in 10 different structures. The problem that we have with brokers and bankers is people always talk to their mums and dads and friends and family, and those people are in different situations as well. Right? So every person's individual circumstance is just solely based on them. Now, as professionals, we can look at their situation and say, hey, based on your situation, you need to do that, not something that your parents say. So if we can, you know, just give them some education on how we can help their circumstance, and then see if we can get them in a better situation.
Okay. What about people that are at the moment that are working reduced hours, and people will be facing this now as of the stage 4 lockdowns? People are going to be facing the situation where they're going to be working reduced hours, where they're not going to be earning the same income as they were, or even people that have been on JobKeeper for a period of time. How do these people access lending? What needs to happen there? And are you dealing with any of those scenarios at the moment, Josh?
So we have, over the last 4 or 5 months, we've got actually plenty of loans approved where clients were on JobKeeper, as long as they're on JobKeeper and they're also being topped up a wage. So the banks aren't comfortable just lending to you if you're just on JobKeeper and you're not earning any extra money over the top. Okay, so we need to ensure that clients, you know, sometimes it's just a precaution of the place where they work, that they got JobKeeper because there was a bit of a downturn. So we need to ensure that person, that there might be 2 wages. But if you're on JobKeeper and your home loan has been on pause for the last 6 months, the banks are now looking at and quite comfortable giving you another 6 months. So, and just on that whole 6 months, I want to just touch on that just really quickly.
Sure.
Your repayment doesn't go up. The bank sends you a new contract so that your repayments remain the same at the end of that 6 months. Okay.
Yeah. Okay.
So some people think that they're adding to their mortgage. Now, you might be adding to your loan term. So you might be on a 27-year loan term, and then that extra 6 months, the bank will just push it out to a 27 and 6 months loan term. Okay. But again, each individual circumstance, it's really hard to, and I apologize, it's really hard to give you an exact answer because everyone's in a different circumstance.
Yeah. Okay. And as far as commercial loans, so we've got a lot of properties that we manage that are, it's, you know, commercial loans on offices, on office suites, retail. Any changes there, Josh?
Look, it's all about the appetite of the bank, and again, what is the industry of that commercial loan, and it's case by case scenario. So there's a lot of the banks that jumped out of commercial lending, and depending on which company and which business style was buying that property.
Okay. All right. Perfect. That's great. I'm going to hit you with some quick questions and then we'll let you get on with your day. So firstly, the all important one that a lot of people want to know, what's a great interest rate? And I know that that's a very broad question, but I'm just going to drill you down until I get a number out of you. What's a great interest rate?
So owner-occupied, principal and interest.
Yeah, owner-occupied, principal and interest.
Fixed rate, 2.09.
2.09% fixed interest rate. Okay. What about investor?
Investor, interest only, you're looking at 2.49 to 2.69 fixed.
Well, I need to have another think about what I'm paying at the moment, Josh, after hearing that. Okay. How do you see the apartment market at the moment from a financing perspective?
Very good answer to that. I'm a mortgage broker, not a real estate agent. However, I've been working very, very closely with your team, and there is a lot of buyers out there. So an answer to that is, how many people am I seeing that I'm doing pre-approvals for? We are talking to clients all week, and we're probably doing 10 to 15 pre-approvals a week. So there's a lot of buyers out there looking.
Yeah. Okay. And that's probably on a broader scale. How do you see the market? You're seeing people that are not just in the market inspecting property. You're seeing people that are presenting you with contracts. Like, I have purchased something. What's happening with values in your space?
It's probably more, which kind of people am I seeing right
Sure.
now? So the clientele that I'm seeing are first home buyers. So there are a lot of buyers out there that say, hey, my job is safe, I'm quite comfortable, and I've got some savings. So I'm probably doing more pre-approvals for first home buyers than I have for a long, long time. There's obviously some smart people who are trying to do a bit of an upgrade right now because there's going to be a bit of a benefit there. So it's more first home buyers that we're meeting every single week.
Okay. For the people that are out there that have a home loan currently, why should they pick up the phone and have a conversation with you right now? Why is that a good idea to assess things right this minute?
Look, a lot of customers always just stick with the bank that they know. And I always say to a client, the bank knows you as 1573C, okay? You're just another number. If we can save you some money, and say it's $300 a month or $400, and in some circumstances, I did a refinance recently and I saved the guy $20,000 for the year, okay? Oof. Now, if that's a half an hour discussion to save some money, why not? Because we're free.
Yep, absolutely. And finally, let's finish on a positive. So, what is the best piece of advice you would give people that are looking to buy right now?
Someone always says to me, when's a good time to buy? I always think now is a good time to buy, because but it also depends on how long you're going to have that property for. Okay. So if you were buying something to flip a property, to make money nice and quick, then is now the right time to buy? Well, we probably don't know what it is. If you buy a property right now and you're comfortable with the repayments, comfortable with your job, and it's a suitable property, well, now's the right time to buy.
Yeah, I think it's rare and certainly doing what I do, and selling apartments in the city, that we meet people that have a 12 or 18 month vision about owning real estate. It's not that those circumstances don't change, but it's just not super common. So, you've got to beat the government, 5.5% in a 12-month period, and then you've got to beat an age and all those other pain points that go through
gains, etc. Yep. So a lot of people have watched too many flipping houses shows, and they think that it's a lot easier than what it is. But you and I both know it's not about that. It's about trying to buy and hold for a long period of time.
Yeah, excellent. And final thing, I promise. Okay, so apartments in the city. The all-important, the big C word, cladding. That's something that we're coming up with a little bit. What's happening with cladding? How do banks assess that? And how are you helping prospective purchasers mitigate those opportunities?
Yeah, so every bank has a certain amount of properties on their register, depending on the building that you're selling. So some banks say, well, we're prepared to go 10% deposit on that building. Other banks are at 20% deposit on that building. So there are still banks doing it, but it's about their risk profile as well, you know. So, you know, just recently I did a loan for one of your team members, and it was a Bank of Melbourne loan. Now that had to be a 30% deposit. And then there was another one that I did just recently, and it was a 10%, and the bank was comfortable. So again, case by case.
And I think that's important, that, you know, if you're dealing with a broker, you've got an opportunity to shop around and to work out what is the best product. Yeah. And, you know, and if you're getting one answer from NAB, for example, you'll get another answer from Westpac. And I think that's where, you know, working with an expert like yourself that does this day in, day out, you know, takes the pain away from the purchaser and the uncertainty that they're not getting a great deal, because that deal could be literally worth thousands of dollars a year for them over the life of the loan.
Absolutely.
Josh, any final thoughts today, or should we try and do this again at some point in time?
Look, I think we should, because things keep changing, right? So policies are changing every single week, turnaround times, and we did talk about this just the last couple of days. Like, some banks are sitting at 35-day turnaround time, which is making people feel uncomfortable, whereas, you know, we're getting turnaround times of 24 hours. So there's probably more discussions to have in the next 3 or 4 weeks.
Let's do that, mate. Thanks again for checking in, and we look forward to catching you soon, Josh. Cheers.
Thanks so much. Have a good day.
You too.